What's up, guys? Boni here. Come sit down. Welcome back to Boni's Life. I want to talk to you about something today that's been keeping me up at night. And I mean, literally, I was lying in bed at 2 in the morning last week, scrolling through the market data, and I just thought most people have no idea what's actually happening behind the scenes right now. Everyone is watching the ticker, panicking over a 5% drop, but nobody is looking at the real game, the macro game. The trillion-dollar war that's being fought right now between inflation, the Federal Reserve, and global geopolitics. And trust me, by the end of this video, you're going to look at your crypto portfolio very differently. So settle in, maybe boil the kettle if Eskom is playing along today. And let's get into it. No script, no teleprompter energy, just me telling you what I found about this crazy week from June 9th to the 13th. So here's the thing, we opened the week on Monday and the market was already feeling heavy. Bitcoin was sitting around $62,500 and you could just feel the tension. It's like when you know a storm is coming but the sky is still clear. And then Tuesday hit. The US Consumer Price Index report dropped and guys, the number made me put down my coffee. Inflation surged to 4.2% annually. That's the highest it's been in 3 years. And why? Because energy prices spiked 23.5% year over year due to the mess in the Middle East. The market panicked. Bitcoin dropped straight down to $59,200. I sat there thinking, where is all this money actually going? Like, who's getting wiped out here? For $400 million in leverage, longs just vanished. Poof. Gone. Because people were betting on cheap money returning, and the inflation data just slammed the door in their faces. And then Wednesday arrived, and this is where it gets spicy. The Federal Reserve had their meeting. The new chair, Kevin Walsh, stepped up to the mic. Now, the market was hoping for a lifeline. Instead, Walsh basically said, listen, we're not cutting rates anytime soon. The probability of a rate hike actually jumped to 68%. I had to read that number 3 times. I actually said it out loud to myself just to make sure I wasn't losing my mind. A rate hike in 2026? That sent shockwaves through everything. But then, just when it looked like we were going to see a total collapse, the geopolitical chessboard flipped. President Trump announced they were canceling strikes on Iran. A ceasefire was on the table. And suddenly, the market breathed. Bitcoin bounced back to $63,500. It was like watching a heavyweight fight where both guys are just throwing haymakers. But I have to keep it real with you, and you know on this channel we don't sugarcoat anything. Let's look at what this actually means for your pocket. If you had taken $100 on Monday morning and bought Bitcoin at $62,500, you'd have been sweating all week. But by Saturday, that $100 would be worth about $102.08. A 2% gain, if you bought Solana, you'd be sitting on $104.82. Now I know what you're thinking, Boni, 2%? That's nothing. But in a week where the fear and greed index dropped to 38 and the macro environment was throwing everything it had at us, surviving and staying in the green is a massive win. It's a testament to the resilience of this asset class. While the tourists were panic selling the bottom, the smart money was just holding the line. Now, here's the part where I put on my business hat because this is what matters for us as investors looking at the week ahead. The old rule was, don't fight the Fed. In this era, it's don't fight the Fed in the geopolitics. Next week, we have the fallout from the FOMC meeting to deal with. But the real wild card, the Middle East. Mediators are saying a final US-Iran peace deal could be signed any day now. If that happens, oil prices are going to drop 10 to 15% immediately. That kills the inflation narrative dead in its tracks. And if inflation drops, the Fed backs off. That is the exact recipe for a massive risk-on rally. But if that deal falls apart, it's going to get ugly. Oil spikes, inflation fears return, and Bitcoin is going to test that $60,000 support level hard. So what's the play? Let's map this out. Scenario A, the bullish case. I give this a 40% chance. The peace deal gets signed, oil drops, and Bitcoin breaks through the $64,500 resistance. If that happens, it's going to be a rocket ship straight to 68,000. Scenario B, the bearish case. 35% chance the DL collapses, wash, stays hawkish, and we break below 60,000. That's an $800 million liquidation cascade, dragging us to 56,000. And scenario C is just range-bound chop between 61 and 64, while everyone waits for news. The market is basically a coiled spring right now, just waiting for a catalyst. My advice to you, if you're an investor watching this, stop being distracted by the noise and start looking at the physical foundation underneath. For spot holders, this is accumulation territory. But if you're trading with leverage, patience is your best friend right now. Wait for a confirmed 4-hour close above 64,500. The institutions like BlackRock, who just pulled in $269 million in a single day, they are buying the dips. They are positioning themselves to control the infrastructure. The question is, are we going to be part of this? Or are we going to realize the world moved on without us? That's what keeps me up at night. Alright guys, that's what's on my mind today. If it made you think, hit that like button. Subscribe if you're new here and tell me in the comments, what's your play for next week? Let's figure this out together. Take care of yourselves. I'll see you in the next one. Boni, out.